Welcome to SelfTax YouTube channel. If you're an expat, business owner, or landlord and you're not subscribed yet, this channel is for you. We break down tax rules, deadlines, and changes clearly and simply. Hit subscribe and stay compliant, without the stress. Every landlord wants to reduce their tax bill legally and correctly. But many do not know which expenses are allowed and which will be rejected by HMRC. In 2026, the rules are the same as in recent years, but landlords continue to make mistakes that cost them money. In this video, I will explain every major expense you can claim as a landlord in 2026 and the important restrictions you must understand before filing your return. Landlord expenses must meet one rule. They must be wholly and exclusively for the purpose of renting out the property. If an expense also relates to personal use, or adds value to the property as an improvement, it may not be allowed as a deduction. There is a difference between repairs and improvements, which we will cover later. Landlords can claim mortgage interest as a tax relief, but not as a full deduction. Since the rule changes, mortgage interest no longer reduces your rental profit directly. Instead, you receive a 20% tax credit. This means you get relief only at the basic rate, even if you pay a higher tax rate. You should not deduct the entire mortgage payment. Only the interest portion qualifies. Repairs and maintenance are fully allowable as long as they restore the property to its original condition. Examples include fixing a broken boiler, repairing leaks, painting between tenants, replacing damaged carpets, repairing electrical faults. These keep the property in working order. They do not increase its value. Improvements are not allowable because they increase the value or extend the life of the property. Examples include installing a new kitchen upgrade, adding an extension, replacing single glazing with double glazing, building a conservatory. These may reduce capital gains tax later, but they cannot be deducted from rental income. Letting agent fees are fully allowable. This includes management fees, tenant finding fees, inventory costs, contract renewal fees. These are genuine business expenses and reduce your rental profit. Landlord insurance is allowable. This includes building insurance, contents insurance for furnished lets, rent guarantee insurance if used for business protection. Personal insurance unrelated to the rental property is not allowable. If the landlord pays utilities or council tax directly, these are allowable. However, if the tenant pays them, you cannot claim these costs. Always match the expense to the responsibility agreement in the tenancy contract. You can claim the cost of services required to run the rental property, such as accountant fees, legal fees related to tenancy agreements, cleaning services between tenants, gardening services, security and safety checks, such as gas safety certificates. All of these support the rental business and are allowable. Landlords can claim travel expenses for journeys made for rental business purposes, such as visiting the property for inspections, collecting rent if not done online, meeting contractors, checking repairs. You cannot claim private travel or the full cost of a personal vehicle. Only the business miles are deductible. To claim expenses correctly, you must keep records. HMRC may ask for evidence, so store receipts, invoices, bank statements, tenancy agreements, service reports, mortgage statements. The most common mistakes landlords make include claiming full mortgage payments instead of interest, claiming improvements as repairs, not keeping receipts, claiming travel without mileage records, assuming furnished items are always allowable. Correct records protect you from challenges and ensure you only pay tax on your true profit. Understanding which expenses are allowed is one of the most important parts of being a landlord in 2026. When you claim the correct expenses, you reduce your taxable profit and stay fully compliant with HMRC rules. Take time to review your records and apply these rules before filing your return. Stay informed and watch the next episode in this series. Thanks for watching. Subscribe to SelfTax for clear practical UK tax guidance. Stay informed, stay compliant, and stay one step ahead of HMRC.